Welcome back. You are watching Business Today television and this is Market Today. I'm Sakshi and with me is Shail Bhatnagar. Time for our corporate radar section and for our corporate chat today. We have with us the top management of Shalby Hospitals. Shanay Shah now joins in. He's the president of Shalby Hospitals. Good morning and welcome to Business Today television. Shanay, and thank you so much for taking the time out. Before we discuss more about, how you have performed in Q2 and what are your guidance as far as the top line and bottom line is concerned, talk to us about what is the trend as far as the occupancy levels are concerned and what is your average revenue per bed right now, per occupied bed right now, and what is the outlook there?
Morning, and thank you for having me. In fact, in terms of the growth momentum that we are seeing in the current year, with the Q1, Q2 results already out, we are seeing 20% kind of top line growth on a year-on-year basis, both the quarters. So we are quite confident that this kind of run rate should continue. And in fact, we have a very strong pipeline going forward in terms of the capacity growing with all the franchisees coming in, as well as the recent news has been that we have kind of applied for the charity commissioner's permission in Mumbai. So once we get the permission in over 2 or 3 months, in about 2 years from then, we should be able to commence our Mumbai facility. So, everything is on track. The pipeline is strong, and this kind of growth momentum can continue for the next 3 to 5 years is what we believe.
Okay, what I did not catch your average revenue per occupied bed. What is the trend there and what is the outlook?
Sure. The average revenue per occupied bed is now between 35 to 38,000 rupees, depending on the quarter. About 5 years back, we used to be at about 30,000. So, overall, as the mix has, kind of evolved over the years, we are seeing that, the average revenue per occupied bed is also growing at between 5 and 10%, per annum.
Okay. Warm welcome to you, Mr. Shah. I just wanted to understand the geographical growth. At the moment, you have about 15 hospitals across 12 Indian cities. What would be the pipeline in terms of either opening new hospitals across India or buying existing ones to reduce time to market?
Sure, that's right. In fact, we are operating 15 hospitals in 12 cities in 6 states at the moment. And, the group has shortlisted, the Delhi and Calcutta as the next phase of growth besides Mumbai. So we are kind of looking at opportunities in terms of multi-speciality hospitals. And we feel it's a good time for us, to kind of take up a new greenfield or an acquisition, because as we speak today, we are already over 20% kind of ROC levels in the hospitals business. So we believe it's a good opportunity for us at this point of time to look at an acquisition in either Delhi or Calcutta, which is plug and play.
Okay, I understand that. Let's just drill down a little further in your earnings. And this is a bit of a question that I hesitate to ask, but nevertheless I will. Profit is up 50%, EBITDA is up 42%, and margin has actually shot up by 400 basis points to about 22.2%. Mr. Shah, is it because of volume growth that you are attracting more and more patients towards yourself, or is this, God forbid, just price rise, that the number of patients are the same but each patient is giving you more money? This is a very touchy topic when it comes to patient costs, but I'm sure your shareholders are happy.
Well, I think, Mr. Bhatnagar, I think it's a good question, but the way we are looking at, the Q1 and Q2, the results are out, and, the volume growth has been between 15 to 18%, and the average revenue per patient growth has been about 3 to 6%, which is in line with, inflation in India. So, as such, if you ask me, it is primarily driven by volume growth as we see it. And we are confident that that is exactly how it will continue to kind of pan out for us over the next few years.
Okay. Shanay, I wanted to ask you, any specialty segments are you looking to add on right now to expand further into your multi-specialty offerings that you do?
Yeah. So as such, we are a multi-speciality hospital. We do all high-end tertiary quaternary care work that happens in any top-tier multi-speciality hospital that we know of in the country or otherwise. And in fact, our key specialities that we've shortlisted that will grow heavily and we'll be investing heavily over the next few years would be orthopedics, because we are globally, kind of the number one player in orthopedics, and also we'll be focusing on cardiology, neurology, oncology, and transplants and other high-end work. So these will continue. These 4 or 5 specialties will continue to be the top focus for the group.
Okay. Shalby had also talked about, a long-term revenue growth target of, say, $100 million over the next 5 to 6 years. But I want to ask you to break it up, say what will happen in FY24, what will happen in FY25 as well, to give the, short to medium-term investors a better understanding of how are you looking at your revenue growth.
So look, for first of all, I think it would be important to break it up into the different business verticals that we have. So of course, the hospitals business is already at $100 million business, and we expect this to grow. We expect this to grow at 20% going forward. And as I said earlier, we have the capacity which is already built to kind of give us that kind of growth going forward. For the implant business, we have set a kind of target of $100 million over the next 5 to 6 years. The immediate target, for that, for FY25 would be to get to about $20 million there. In FY23, we did about 100 crores of business, about 90 crores of business, and we've tripled the business from FY22. So we have that momentum in place. We are confident of achieving those targets going forward. So I think overall, this is how we see it.
Sure. Right.
Fair point, sir. Let's look at how the expansion is. You've also mentioned that there are perhaps some chains or some standalone entities that you're looking at in Delhi as well as Calcutta. In the existing setup of hospitals that you have, are you planning to add fresh number of beds or maybe some new specialties?
Sure. So, that is exactly what is going on at the moment, because, as the occupancy growth, as we were talking earlier, that the volume growth is between 15 to 18% depending on the quarter. And we already have a bed capacity of 2,000 beds as we speak, and our operational beds are close to 1,200. We have the potential to kind of increase the bed capacity from the 1,200 to 2,000 with very minimal Capex. So we are looking at a Capex of around 15 crores only to kind of increase the bed capacity from 1,200 to 2,000. So, that is something that will, kind of happen over the next 3 to 5 years as the volume growth happens and, we see a higher occupancy. And besides that, we just spoke about some of the organic as well as inorganic opportunities that the company keeps evaluating. In our case, it will be Delhi and Calcutta, to start.
Mr. Shah, mathematically, if you see, when you look at adding a fresh bed to an existing facility, how much does it cost? So 15 crores is what you're trying to spend to increase beds from 1,200 to 2,000. So that's 800 beds at the cost of 15 crores. Am I right? Isn't this number too less?
You're right. In our case, all the construction work, interior work, most of it has been done, and which is why we are seeing an incremental, kind of investment of only 15 crores. Otherwise, the cities where we are present, we are looking at investments of not less than 1 to 1.5 crores a bed. if you're building something from scratch and building something, at the scale of 200 to 300 beds. As I said, in our case, the investment's already done, the project risk is behind us, and it's just that we need to kind of, as we see the ramp up of the hospitals in terms of volumes, we'll continuously, kind of add beds. And what happens is that, all these additional 800 beds that I'm talking about, these kind of flows will now start. We'll have to start manning the flows with the paramedical staff, nurses, etc. So that will be another investment that we'll have to do as we see the volume growth, kind of go up.
Right. Shanay, talk to us about, your cash on the books right now, your current debt levels. And since you're now talking about keen interest on both organic and inorganic opportunities going forward, would you be also requiring to raise any fresh cash?
Well, on the net cash, we are as a company, we are net cash at the moment. We are sitting on about 50 crores of net cash, and based on the balance sheet, the lenders and bankers are happy to kind of take an exposure of up to 600 to 800 crores on on our balance sheet as we speak.